Hello and welcome to BQ Prime. Joining us today is Mr. Rajendra Pawar. He is the CEO of NIIT Limited. He joined to us a few hours after the company declared its second quarter earnings, where the revenue rose 30% quarter on quarter and the profit saw a 336% jump to 10.6 crore. The earnings, however, include the impact of the demerger of NIIT Learning Systems, which was listed during the quarter. Mr. Pawar, welcome to BQ Prime.
My pleasure.
Sir, first up, your earnings statements include a statement saying earnings include the impact of the demerger of NIIT Learning Systems. Can you just give us some color, or can you give us a little bit of explanation on that front, sir?
Well, insofar as the results are concerned, there is no difference, because if you look at the EBITDA numbers between the EBITDA of last quarter and this quarter, there's almost an 86 million rupee improvement, and that translates to the profit as well, profit after tax going from 22 to 106 million. So in the financial, there's no implication. Of course, the two entities have been operating as independent divisions, but of course, there are now two listed companies, and so operationally, they become two different companies.
Okay. So there is no number overlap as such between the two companies as from now on?
No, there's no, there's none.
Okay.
In fact, we had talked about the intention of the demerger in early February itself, and therefore we were doing our bookkeeping for last year on the assumption that the demerger would happen in the time, which exactly.
Okay.
So this reflects the picture of the entity.
Okay.
For the whole last year.
Okay. So a major point of question is, since you are in the business, is actually the downturn, if I may say so, in the hiring trends in the technology sector. Some are predicting that the fresher hiring will be at its lowest since 2008. There will be 25% decline in how many people are hired. There'll actually be a reduction in headcount in the technology companies. So what are you making of this scenario? Is it as bleak as what we are seeing?
See, first of all, we have to remember that COVID period was confusing, and post-COVID, there was massive hiring. 2021, if you see, massive hiring. And now when this whole uncertainty has come in front of the world, for many reasons, which I don't have to tell you about, you know that better than I do. So I think in this period, then companies are basically saying, if we overhired earlier, let's now leverage every person we have in the company to advantage. So while they continue to hire, companies are hiring. It's not that they're not hiring, but there's also attrition. So in this quarter, what we're seeing couple of quarters, the attrition numbers are more than the hiring numbers. So you have a net result where people have somewhat less employees on their own. And that's across the board, as you can see. So it's not a company issue. I think it's a sectoral issue. It's a across the board issue. And I think this uncertainty is not going to go away very quickly. We can see the whole geopolitics, we can see the state of the economy in the world. I mean, India is a shining star, is an exception. But for the marketplace, there are still challenges which are not resolved. And now we have the West Asia issue that doesn't affect us directly. But I think all of this creates a sentiment where customers are becoming very circumspect and are being very mindful of how they spend. And that is translating into our IT services companies being extra cautious and leveraging the talent which is already there rather than adding more. So quite clearly, this has an impact on young people, and it has an impact on their desire to invest in themselves to get ready for the marketplace. So this has panned out. I think last quarter we saw the shock of it when we discussed it, if you recall. And in terms of hiring, it has remained there. So we've had to shift a lot of gears during this time. And so we could bring things back compared to last quarter significantly, 30% up, but not yet still quite to the level of last same last year.
So actually, you're kind of preempting my next question. How has this sort of downturn impacted you, since you are in the business of training and hiring people, or actually training people for the industry?
Yeah, the biggest hit was last quarter when there was a sudden news and there was a whole sentiment question, and people also beginning to think, should we invest or not invest? But all of us know that life has to carry on. People have to prepare themselves. So some amount of coming back from the shock is there, but It's not an increase, but it's a recognition of the difficulty.
Mhm.
And so we see that people are indeed, at least from a training point of view, uh, looking at things more seriously.
Mhm.
We expect they'll be cautious. We'll have to watch how the sector hiring
Mhm.
changes. And so in our case, we've had to look at many things to be done to deal with this uncertainty in the market. People have to skill themselves, and now it's now or later.
Mhm.
But we just want to remove part of that
Mhm.
uncertainty by increasing our offering, getting much deeper into technology offerings.
Mhm.
So, for example, there are two main sectors that we have been serving, as you know. From inception, it was the IT sector, which till the turn of the century was almost all IT. And then we started the early part of this millennium. We added banking in the financial sector.
Mhm.
And today, roughly a third of our activities in the BFSI sector and two-thirds still in technology. So one is that for both these sectors, we had to start looking at what is the cutting edge. So, for example, many of our programs now have elements of generative AI, which is becoming kind of a norm that some amount of that has to be there. People need a cutting edge, they need to learn new things. So, technology programs, almost all of them have it in there as part of what we teach. But even the other areas, we're looking at what new technologies, what new offerings would make sense. So, that has been one quick action we had to take.
Mhm.
And then, of course, we had to also curtail and look at our operating costs and see where we could take appropriate actions. And at the same time, we have to invest in building new programs. So the direction going forward, we spoke last time, in the near and medium term future is to open many more sectors like IT and banking.
Mhm.
But in the short term, it has been in terms of sharpening the edge of our programs, looking at new technologies like generative AI,
Mhm.
and of course, doing cost management.
Okay. But all said, but you have seen a 69% surge quarter on quarter when it comes to hiring in your StackRoute, TPAS, and the BFSI sectors. What explains that jump, sir?
Well, to be realistic, it was a drop last quarter.
Okay.
So compared to that, it's a jump.
Okay.
But we still haven't reached last year's level for the quarter. We're
Mhm.
still below that.
Okay.
Right? But last quarter, I think, caught everybody by surprise. And consumer sentiment is okay, let's just see what happens. And now people are reconciling with the reality.
Okay.
So obviously, much more outreach, much more communication, improvement in the programs. That doesn't happen overnight, but we've had to bring in many things very quickly, particularly generative AI. We had to bring it very quickly. So it was in the works for a while. It's not that we thought of it then, but we brought forward the programs and started adding that to other areas. So we haven't yet quite come to last year's level, which we need to as we go forward. But it's a big improvement from the drop we had seen last quarter.
Okay. You mentioned about generative AI. So, is it now part of all your training programs? Is the technology embedded into everything that you do now?
Well, for the training we do for consumers as against corporates we have a lot of programs in Gen AI. But even for consumers, for the programs we do in StackRoute, what we do in digital marketing, what we do in data science, in all of those programs, we have brought in the modules on generative AI. And more of that will be added as we go forward because that is a need of the hour. And that's a need for all existing professionals as well, not just for the new ones. So that is across the board. And we have been at it, building those programs for the last more than a year, and we brought it forward now to make it available.
Yeah. Finally, let's talk a little bit about the operational profitability. You are back in the positive territory. In what sense? So, and have you? So, what margin levers have you deployed to shore up your profitability? Have you held back pay hikes? Have you, I mean, sorry, has utilization improved for you at your company?
Yes, utilization has improved. That is one sure thing. And then we have also been far more mindful of the operating costs across sectors, including marketing. In every area, we've been far more mindful of costs. And many of the variable costs we have managed quite tightly.
Okay.
And then, of course, first of all, you have to realize that revenues are up significantly. That's the
Yeah.
biggest contributor to margin improvements. It's a very significant increase over last quarter, as you've seen. It's a good 30% increase. So the costs in the short term can't be curtailed or increased. So it's come closer to the level of revenue last year, and therefore margins increase significantly.
Okay.
Because of that.
Yeah. Finally, we are at the half-year mark. 6 months more to go. What are your plans for the rest of the fiscal? Where do you want to end FY24, both in terms of top line as well as your margin?
Well, see, I mean, I wish we could predict what the environment is going to be like.
Yeah.
So everything is dependent on that, right? So we have to be mindful. However, we took the last quarter's shock with more seriousness than we would do because it was a big shock. So we think we'll aim to reach the level of revenue of last year.
Okay.
In spite of the shock last quarter. In this year, aim to reach that, we will be a little short of that. But profitability, we expect that if we reach close to that level, we'll be better.
All right. Thank you, Mr. Pawar, for joining us just hours after your earnings. Congratulations for the earnings again. Thank you, viewers, for tuning in. This is Tushar for BQ Prime.